Hello and welcome. Today, we are tackling one of the biggest questions people have about their retirement savings. Can you actually get your hands on that 401k money while you're still employed? Let's dive right in. So, this is the big one, right? You need cash, maybe for an emergency, and that big 401k balance is just sitting there. The short answer is yes, you can. But, and this is a huge but, it is not as simple as going to the bank. There are some serious rules to follow, and that's exactly what we're going to break down today. So here's our game plan. We'll start with why this is even a question in the first place. Then we'll walk through your three main options: taking a loan, proving a hardship, and what happens when you hit a certain magic age. After that, we'll cover the fine print, the stuff you absolutely can't ignore. And finally, we'll talk about how to decide on your next move.
Okay, so first things first, why all the hoops to jump through just to access your own money? Well, it all comes down to the fundamental purpose of a 401k. See, your 401k isn't designed to be a piggy bank for today. It's for your future. The government gives you some pretty sweet tax breaks to encourage you to save, but in exchange for those tax breaks, they put up guardrails. They want to make sure that money is actually there for you when you retire. That's why your employer and the IRS both get a say in what you do.
All right, let's get into your first and, honestly, most common option for getting cash out: taking a loan from your own 401k. You really have to think of this as borrowing from your future self. The good news is you're paying yourself back, and that interest you pay on the loan, it doesn't go to a bank, it goes right back into your own retirement account, which is a nice perk. If you pay it back on time, you can completely avoid taxes and penalties. This process right here shows you why your employer is always involved. You request it, they have to approve it, and then the payments are automatically taken from your paycheck. But listen, here's the biggest risk, and you have to know this. If you lose or leave your job, the entire loan balance could be due almost immediately. If you can't pay it back, it gets treated as a withdrawal, and then you're hit with taxes and penalties. It's a huge gamble. Okay, but what if you're in a situation where taking on more debt, even from yourself, just isn't the answer? That brings us to something called a hardship withdrawal. Now, this is totally different from a loan. This is a permanent withdrawal. The money is gone from your retirement account for good. And you can't just claim a hardship because you want a new car. The IRS has a very strict list of what qualifies. We're talking things like preventing foreclosure on your home, major medical bills, or certain funeral expenses. It has to be a serious, documented need. Let's put these side by side because this really spells it out. With a loan, you have to repay it, but you can avoid penalties. With a hardship withdrawal, you can't repay it, and you're almost guaranteed to face a penalty. And notice the one thing they both have in common: your employer has to approve it. There's no getting around that. So you've got loans for borrowing and hardships for emergencies, but there's a third path that opens up, and it's all about your age. This right here is the magic number in the entire world of retirement planning. Once you hit 59 and a half, a lot of the restrictive rules suddenly change in your favor. This is called an in-service withdrawal, and it's a game changer. Now, the key phrase here is your plan may allow. Not all companies offer this, but if yours does, it means once you're 59 and a half, you can take money out without that painful 10% early withdrawal penalty. You'll still owe regular income tax on the money, of course, but it gives you so much more flexibility as you get closer to retirement. All right, so you know the three main ways to get your money. But before you do anything, we have to talk about the fine print. This is the stuff that can really come back to bite you if you're not careful. Please burn this number into your memory. For pretty much any hardship withdrawal you take before you're 59 and a half, the IRS is going to hit you with this 10% early withdrawal penalty. So think about it. If you take out, say, $20,000, that's a $2,000 penalty gone, poof, right off the top. And that's before you even pay a dime in regular income taxes on that money. Ouch. This leads to a question we get all the time. Can I do this privately? And the simple answer is no. Because your employer is the sponsor of your 401k plan, they are fundamentally part of the process. There's just no way to keep it a secret. So let's be crystal clear about what your employer can see and do. Yes, they usually can see your balance. Yes, they're absolutely notified when you request a loan. Yes, they are the ones who have to approve a hardship withdrawal. And this is important. Yes, they have the right to deny those requests if you don't meet the specific rules laid out in your company's plan. Okay, we've covered a lot of ground. We've talked about the options and the pitfalls. Let's pull this all together so you can figure out what your next move should be. And here we are, right back where we started. After everything we've talked about, the loans, the hardships, the 59.5 rule, what's the final verdict on cashing out your 401k while you're still employed? So, yes, you can, but it is almost never easy, and it is definitely not cheap. Every single one of these options comes with major trade-offs. You're trading your future security for cash today, and that's a decision that has some really heavy long-term consequences that you need to weigh very, very carefully. You know, it's perfectly normal if you're feeling a bit overwhelmed right now. These rules are complicated, and making the wrong move can cost you thousands of dollars. This is exactly where getting some professional guidance can make all the difference in the world.
And that's exactly what we're here for at The Annuity Expert. Our entire job is to help you make sense of this stuff. We work with people every single day on their 401ks and their overall retirement picture, helping them find the smartest path forward. Whether you're thinking about a loan, facing a true hardship, or just trying to plan for your future, we really encourage you to reach out. Give us a call or visit our website. Our consultations are always completely free and there's never any obligation. We're just here to give you the clear, expert advice you need to feel confident about your financial future.